ask now, and Vijay can take next session for CARO, and CARO is also very important, and this is very important for to align the schedule 3 also. So Sumit, you can start.
Thank you so much, Anshul sir, for sharing your knowledge. And also thanks to the audience for being so participative. Now I would like to introduce you to CA Vijay Singh Rathore, who is a 2017 batch CA pass out. He has more than 4 years of experience in the field of audit, assurance, and taxation. And he would share his knowledge about the newly introduced CARO 2020. So now, Vijay sir, I would request you to take over the audience.
Thank you, Sumit, for the introduction. I welcome all of you to this webinar on recent changes of Schedule 3, CARO and Audit Trail. My friend Ansulji has already discussed about the recent changes in Schedule 3 and Audit Trail. Now I will be covering about the CARO 2020. CARO 2020 was initially published on 25th of February 2020, but it was made applicable from 1st April 2021. And the same changes as it was discussed by Mr. Ansulji in Schedule 3 has been incorporated into the CARO 2020 as well. So I'll start with the first. There are earlier in 2016 CARO, there were 16 clauses that has to be reported by the auditor. Now in 2020 CARO, there are 21 clauses that has to be reported by the auditor in his audit report. So I'll be starting with the first clause that auditor has to report. My screen is visible. Hello, Sumit.
Yes, sir, your screen is visible.
Okay. I'll start with applicability. As far as the applicability is concerned, there is nothing much changes about applicability. There are only change in the definition of small companies. Earlier, there was also exemption for the small companies, but the recent changes by the MCA, the definition of small company has been changed. Earlier, the limit was 50 lakhs for the paid up share capital and 2 crore for the turnover. For the previous financial year, company is called a small company, but now that has been amended. Now paid up capital has been increased from 50 lakhs to 2 crore rupees, and the turnover limit has been increased to 10 crores from the 20 crores, sorry, from the 2 crores. That will be called as a small company. So if you are a small company, CARO 2020 is not applicable to you. And earlier exemptions that like 1-person companies, Section 8 companies, insurance companies, and banking companies that are also not covered under 2016 CARO, and that same has been applicable to the 2020 CARO as well. So these exemptions are the same as it was in 2016 CARO, but the definition of small company has been changed. So MCA has made, there are 5 new additions to the 2020 CARO, and there are various changes to the existing clauses as well. So I'll be covering one by one. I'll start with the first one, that is fixed asset. Earlier, auditor has to report on the quantitative details of the fixed asset. Now there has been amendment that auditor also has to comment upon the quantitative details, full particulars, like you can see into the clause B. It is mentioned that whether the company is maintaining proper records showing full particulars of intangible assets. Like you have to maintain the records of register showing the full details about the intangible assets as well. So this changes has been brought into Schedule 3 as well, where you have to write upon that property, plant, equipment, and intangible assets, particularly on the face of the balance sheet. So this change has been to align with the Schedule 3. And another major change that already has been discussed by Anshulji into the schedule 3, that if you are holding any immovable property which is not in the name of the company, now auditor also has to report in his current audit report. Earlier also the same clause was there, but the particulars of the clause has been changed. Now there is two addition to in particulars. One is that now what is the reason behind not holding that asset into the name of the company also has to be reported, and what is the reason. And if the property is in dispute, because of the dispute the property is not in the name of the company, then that reason of dispute also has to be reported into the CARO 2020. Next is there are next is that if there any revelation that already as Anshuji discussed that more than 10% or what into fixed asset, there are more than 10% revelation into gross value of property, plant and equipment, that has to be reported into the CARO 2020 as well. Now, and another change into fixed asset, that if there is any proceeding against the company under Benami Property Act, that has to be reported under the CARO 2020 as well. So these are the changes in schedule 3 as well. So that has to be reported into the CARO 2020 by the auditor in his audit report. So if you can extract the key changes from this clause 1 is that separate reporting for PPE and intangible assets are also there. No reporting on title deeds where companies lessee in favor of company lessee और लीज वाले एग्रीमेंट्स के लिए there is, अगर कंपनी में है तो उसकी कोई रिपोर्टिंग करने की जरूरत नहीं है. और स्पेसिफिक रिक्वायरमेंट दैट हैज ऑलरेडी बीन डिस्कस्ड टाइटल डीड्स की वो देनी है. न्यू क्लॉज हैज बीन इंसर्टेड रिगार्डिंग रिवोल्यूशन and the Benami Property Act. So these are the key changes from clause 1. I'll move forward to the second clause, that is physical verification of inventories. This clause was already there in CARO 2016, but now there is one change, that if the verification made by the management and the actual stock, there is a change or management appropriately finds that there is a discrepancies of more than 10% into the each class of inventory, so that has been properly dealt or not. If properly not dealt, that auditor has to report in CARO 2020 if there is more than 10% of change and has not been dealt properly. Now another change of I think my PPT is not moving. Give me a second for that.
Hello.
Sorry for the inconvenience caused, and I'll start with the next. Anshulji has already discussed that if there is any loan from the financial institution or banks of more than 5 crores, and if you have placed any securities like current assets, like debtors you have placed for book debts, stock statements, and that has been filed with the banks, that should be in agreement with the books of account. That means there should be matching both the books of accounts and the stock statement submitted to the bank. There should be, if not matching, then you have to provide the details into CARO 2020. So if you find out that what are the key changes from the clause 2, that auditor has to report whether coverage or procedure of physical verification made by the management is appropriate, any discrepancies found more than 10% has been properly dealt or not, or third is the major important change that already has been highlighted, that the stock statements or book debt statements submitted by you to the bank should be in agreement with the books of accounts. Now I'll be moving forward to the third clause, that is repayment of investment guarantee securities and loans guaranteed by the company amended. This clause was already into CARO 2016, but now there has been some major amendments related to this clause. One is that whether during the year the company has made any investment. Now the word investment is added. In provided any guarantee also added, securities or granted any loans and advances in the nature of loans. So means if you have provided any advance to your companies, like any other person secured or unsecured to companies provided funds LLP, then it will be covered under CARO 2020. This clause you have to report. What you have to report is mentioned below. Whether during the year the company has provided any loans, provided advances in the nature of loans, stood guarantee, provided security to other entities. So following has to be आपको indicate. The first is the aggregate amount of outstanding balance, मतलब closing balance outstanding you have to report with the subsidiaries, joint venture and associates. And others also you have to report what is the aggregate amount of outstanding at the close of the balance sheet date. So these are the two amendments that you have to report. Next is whether the investment meant, this clause was already there, that it is not prejudicial to the interest of the company. That should be interest of the company. If you are giving interest-free loans to the parties, then you have to report under CARO 2020. And another one is that repayment payment, this change is already has been discussed by Anshulji, that schedule 3 has also amended in this respect, that you have to comment upon whether there is any repayment schedule, whether there is any terms and condition has been defined or not by the borrower or lender. So if there is not any terms and condition, that you have to report under 2020. And this clause was already there, that if more than 90 days outstanding not paid, then you have to report under CARO 2020. And another E point that you can say is whether which has been fallen due during the year has been renewed. It means you have received any loan and which have not been paid by you to the borrower, but freshly renewed the same loan. If it means that you have not paid the loan and freshly renewed, that means that you are not paying actually that loans. You are just settling by the giving it name by fresh loan, then you have to report that into CARO 2020. So this is a big change. If you are renewing the existing loan, then that has to be reported under CARO 2020. And these are the key changes that we can summarize from this clause, that reporting coverage has been extended to the investments and other advances as well. New clause has been inserted, like terms and condition you have to explain and others. Additional reporting in terms of loan guarantee and advances provided. If you have renewed or extended fresh loan, then that has also be reported. Or repayment or demand loan without specifying the terms and condition, that has to be reported. These are the few changes, that key changes from this clause. Next, I'll moving on to the clause 4. Compliance of section 185 and 186. There is no big change as related to, there is, I think, no changes in CARO 2016 and 2020. Both are the same. Next is acceptance of deposit amended. Now earlier it was not mentioned in this clause 5 that deemed deposit to be also be reported. Now there has been amended that if deposit which is in nature of deemed to be deposit, you have considered it's like advances given to the creditors for more than 12 is considered as a deemed deposits, that has to be reported under CARO 2020. So these are the key changes. Reporting of regulatory compliance with reference to amounts with the deemed to be deposit has been amended. And now I'll moving forward to clause 6, with that is cost reports. As far as the cost reports is concerned, there is no change. This is same as it was in CARO 2016. Next is clause 7, which is about statutory dues, and this is only a change about the what has been written, that drafting change are only there. It was not written that goods and GST should be paid on time. Now there is 2017 GST has been applicable to the more or less company, so they have amended in this clause as well that if the goods and GST is not paid within the times, that has to be reported in the CARO 2020 as well. So this is a mere drafting change that tax payment should be made on the time according to the rules and regulations. So it's just a drafting change that GST has been included into this clause. Next is clause 8. Clause 8 is disclosure of transaction not recorded in the books of accounts. Earlier, this is a new clause, has been amended. There was no such clause that it what has to be reported. Now there is change ki whether any transaction not recorded in the books of accounts have been surrendered or disclosed as an income during the year in the tax assessments under the Income Tax Act 1961. If so, whether the previously unrecorded income has been properly recorded in the books of accounts during the year. That means if there has been a surrender by the assessee to the income tax department, any income which has been not recorded in the books of account, that has to be reported now by the auditor into the CARO 2020. So this new clause has been inserted that if you have surrendered any income to the income tax department, that has to be reported under CARO 2020 as well. Now this clause 9, this has been amended that default in repayment of loans and other borrowings. That means whether a company has a defaulted in repayment of loans and borrowing, then following has to be reported. That what is the nature of borrowing, name of the lender, amount not paid on the due date, principal or interest, what is the component, and number of days to be delayed not paid. So this clause has been amended. Earlier it was not mentioned, and now this is also that earlier it was written that loans received from the financial institution has also be covered, has only covered by this clause. Now loan from any party is to be covered under this clause if you have not paid any loan from any person, that has to be reported the following contents. Next is what has to be reported under this clause, whether their company is decided willful defaulter from by the any financial institution by not paying of the loan, that has to be reported. And what is the utilization of these funds? If you raise the funds for the purpose of short term, then it should be used only that purpose. If not used for that purpose, then auditor has to be reported into the CARO 2020 that where the funds has been actually used. So I'll be going to the key changes of this clause. That means interest payment is also covered. Earlier it was not mentioned that interest payment should be made on time. Now if you received any loan and not paid interest portion also, that then auditor has to report into CARO 2020 that interest payment is also not paid on the time. Coverage of the report is also extended, and it means CARO 2020 earlier 16 was not applicable to the old type of lenders. Now it is applicable to the old type of lenders, and following are the new things that has been amended, that what are the purpose it is used for, the actual purpose and others. Next is clause 10. Clause 10 is money raised by IPO, FPO and preferential allotment, private allot placement and shares of convertible debentures. If you raised any money by IPO, FPO, then this clause is applicable. As far as the amendment is concerned, now there is no much changes. Earlier there was two clauses related to preferential allotment and IPO, FPO. Now they have combined it both into the one clause, that both the clauses are combined as a single clause. And this clause 11, that is fraud reporting. 2016 CARO also has this reporting of fraud reporting, but there is major change that if any fraud is by the company, on the company by its employee, then also it has to be reported. Earlier it was not that. Now if any fraud is happening by the company or on the company, that has to be reported into ADT 4 prescribed by companies amendment rules 2014 under rule number 13. And next one amendment is also there in this clause, that any complaints received by a whistleblower, that has to be properly dealt or net by the management. So it means if to the existing companies, there should be a system of having complaints through any person, that we can say it's whistleblower complaints, that has to be properly dealt by the management. So it is the change in this clause. So these are the key changes, that reporting of all frauds on the company, that has to be, whether it is by the employees or not, or done by any company, that has to be reported. And now there has to be whistleblower complaint has to be properly dealt by the companies. So this is the change in clause 11. Now clause 12, and that is the only for Nidhi companies, and that is also the same, like if you have not payment of interest or deposit to the Nidhi companies, so that has to be reported. This is not a big change as far as concerned. Clause 13, this is related to transaction with the related parties, and this clause is same as the earlier CARO 2016. There is no change. Now there is a new section that is called internal audit system. Earlier there was no section of internal audit. Now the company has to report on whether the company is having internal audit system commensurate with the size and nature of the business. To the applicable companies who's having turnover of more than 200 crores, internal audit system is applicable. So if there is any internal audit system or not, the statutory auditor has to comment in his CARO report that whether there is an internal audit system or not, or whether reports of internal auditor has been considered by the statutory auditor or not, that also has to be reported under CARO 2020. So basically now you have to read and go through with the detailed understanding of internal auditors report before finalizing your statutory audits. Clause 15 is non-cash transaction with the directors. This clause was already there into CARO 2016. There is no changes as far as to CARO 2020 is concerned. Now this is already discussed by Anshulji into the part 3 of schedule 3 related to the NBFCs, that NBFCs has to obtain certificate of registration from RBI, and if the NBFC is a CIC, that is core investment company, that also has to obtain registration from the RBI. These are the registration the company is holding or not. Without that holding, that the company cannot be perform any transaction related to NBFCs. So these are the compliance change in CARO 2020. Next is this is new section of new clause amended, that is cash losses. And in this section, if a company is suffering from losses, then company has to calculate that what amount is there which consists of cash losses. That means if you have 100 crore losses, out of which if you have to remove the losses which has been due to non-cash expenses like depreciation and others, then amount that is coming after that losses, that has to be reported under CARO 2020. And this is also new section that it was not into CARO 2016, that if there any resignation before the by the statutory auditor, then what are the reasons behind that resignation, that what are the issues and objection and concerns raised by the outgoing auditor that has been considered by the management, and the upcoming auditor has to be reported into CARO 2020. It means there is intermediate, if withdrawal by the auditor, then there should be a proper issues and objection that has been objected by the outgoing auditor should be properly addressed by the incoming auditor. next is, this is new section that has been amended, and this is a very like interesting clause has been inserted, that capability of company of needs to its existing liability at the date of balance sheet date. Now auditor has to assess as on the date of balance sheet that what are the liabilities standing in the balance sheet of the company, and whether the company is going concern or not, whether this clause is basically testing the going concern capabilities of the company. So on the basis of ratios, what is the management's plans and what are the other financial cash flows that are to be coming into the coming years, whether the company is able to pay its liabilities into the coming year or not. So auditor has to comment on that as well. So for that, management has to explain their plans to the auditor, that what are the plans into upcoming years, whether they are in a going concern nature or not. So it's like widened scope for the auditor. Auditor has to comment upon the management's plans as well, whether they are going to be a going concern or not. So this is an interesting change, that a new clause is inserted which requires auditor to report on the company's ability to pay off its existing liabilities over a period of next 1 year, whether fallen due to. Auditors are now loaded with a huge responsibility to verify the reports on financial stability of the company for the next 1 year. So auditor has to verify whether this company is going to be a going concern company or not. So auditor now to require to be very interactive with the management, that what are their plans as well. Next is, this comment is also, this clause is also has been inserted newly because the CARO 2020 CSR amendment, this is basically CSR related. So transferring of amount remaining unspent under clause subsection 5 of section 135 to the fund specified. That means if you have to transfer the unspent amount under section 135, that means you will get a period of time 6 months after expiry of 3 years. You have to transfer that amount to the funds specified under schedule 7. If you have not transferred that, then you have to report that into CARO 2020 as well. So these merely changes into the align with the schedule CSR changes. Next, and this is final clause 21. This is consolidated financial statement. This is also newly brought up section, a newly brought up clause. And this clause is required that whether there has been adverse remarks into the subsidiary company's auditor report. So if there is any qualification by the auditor's report into the subsidiary companies, then auditor in his consolidated audit report has to indicate that the same qualification that has been mentioned to the subsidiary company. So now it is responsibility of holding company's auditor to report the what are the adverse remarks, major adverse remarks by the subsidiary company auditors in their audit report, that has to be reported in his auditor's reports. Thanks everyone for your patience hearing, and thank you everyone. Now I request Sumit to look up and forward. Is there any questions or not?
So if anyone has any question, they can unmute themselves or put it in the chat box.
You can raise hands if anybody has questions from the Zoom panel, and then we will unmute you, or you can put in the chat box also. Because anybody has any questions? And the questions could be with respect to Schedule 3 or CARO, either of them. It's not an issue. If anybody has any question, then we will be great to answer that. It's an important topic because especially the audit trail is changing from 1st April 2020, that is being into effect. So that needs to be taken care. Also, during the time we make this financials for this year, a lot many financials are based on previous year format, but the format will also undergo a lot of change with very modifications and changes. So that also needs to be taken care. So if anybody has any questions. Okay, so that's it. I think Sumit, you can move towards closure. And thank you so much all for to all the participants. We will share this PPT. Both the PPTs would be shared. And if any concerns, also you can get back to us, get back to Anshulji or Vijay at any point of time. Sumit, you want to close up?
Yes, sir. Thank you so much, Vijay sir and Naman sir. So I would like to mention that we will be sharing a feedback form. So audience, please do take time to fill that feedback form. And thank you so much, audience, for being so participative and lending us your ears. Thank you, everyone.
Thank you.
Yeah, please share the feedback form.
Sure, sir.
Thank you so much. Bye.